Good morning all and welcome to today's video. So today I have just the one pair on watch, which is Kiwi dollar, and I thought it might be useful to tell you why I took Euro CAD off of watch this morning. So I'm going to quickly touch on that and then go on to dollar CAD, Kiwi dollar rather. For some reason, TradingView is still not letting me remove my old alerts. I don't know why that is, but that's why you can see two alerts on the screen at the moment. But anyway, it is what it is. Right, so I'm just going to run through this quickly on EuroCAD, and then I'm going to talk about what I'll be looking for from Kiwi dollar. So I'm not going to spend too much time on this, but on the higher time frames, you can see that we scooped all the way round, and then we tapped into this liquidity point. We pushed up, and then I was just looking for that impulse correction continuation to take out this high because we had a near miss to it, which price failed to tap into last time around. Okay, so that was the higher time frame narrative. You can see that we had the near miss here, we had the low there, we near missed to that area, scooped all the way back down again, tapped into the area, and then pushed up aggressively. Okay, then on the lower time frames, you can see that we had this. You can see we have the impulse correction continuation, and I was just looking for trades from this area of value to the upside to potentially capitalize on that move, which I've highlighted by way using the path tool. Okay, so if I just zoom in, so on the 1 hour chart, we had just looking for the same psychology again. We had the base here. We come down, we near missed to that area, giving me a clue that this was the area of value. And if you remember in yesterday's video, I was looking at this as a potential impulse correction continuation to take us down to that area, partly because we had an impulse correction continuation middle section, giving me a clue that this move down here would likely be the one that tapped into that area before price moved to the upside. Okay. However, price got slightly closer or came close to this area again and then pushed up again. Okay, it's still, if you look at what's happened now, price did tap into the high, or more or less tapped into the high, and it's pushed down from there. However, the key factor for me, so we do have this kind of this structure, okay, which in itself has a 1, 2, 3 middle section, giving me a clue, because we've tapped into this area here, that this is a completed structure which will likely find its way down to here to break this. So we have when we have a 1, 2, 3 with a 1, 2, 3 middle section, this implies a completed piece of structure, and if it's come from a move down, that implies impulse correction continuation. However, one of the things we have to factor in is how much volume has been built up within this piece of the structure if this is an impulse correction continuation, because typically speaking, if we just measure the volume that's been built up, measure it from there to there, if we are going to tap into this area here and then move to the upside, typically speaking, price will break out by at least the same amount. Okay, so if we just measure the volume and then take it to the break, typically speaking, price will break out by the same amount as this structure was high, if that makes sense. Okay, so if that was to happen, that would take us all the way down to here. Okay, so, which would give us that kind of M style pattern. So we'd have that kind of move before the move to the upside, which could still occur. But if you just look at the candles, if you just count the candles at the bottom of the screen, that would not be ready. That would be very unlikely to be ready by the end of the day. And if it was, then we would have a lot of aggression in this area, and then I would anticipate price stalling for some time as people wait for the aggression to kind of slow down, as people wait for some kind of stall in price before the move to the upside. So it's just literally the volume that's been built up here. I've not seen too many instances of a middle section to some extent becoming this voluminous, where price then just breaks the low of the structure, taps in, and then goes and then moves to the upside. I've not seen too many instances of that once there's been this much volume built up within a piece of structure. So just taking that off of watch for the moment, and I shall let price do its thing, and we shall reconvene with this pair at a later stage. Be that I'm pretty sure I'll have this on watch next week, but it just needs a little bit more development by the looks of it for me to be interested in anything for the reason given. So Kiwi dollar, let's look at this on the higher time frames. So on the higher time frames, everything else just that I've got in my top 6 and in my additional pairs just looks like it needs more time to develop. So this is where many people know how to make money, but many people in trading don't know how to stay out of positions, which is why they are not profitable overall. It's not always because they don't know what they're doing. Okay, so staying out of positions is a position in itself, and many people just can't get their heads around that, or it takes them a long time to. So the reason I'm looking at this is because we tap into this area here. Okay, price only wicks to that area. And a lot of time, these wicks, seeing as I've got a little bit more time today, I'm going to just take you through more of the thought process. So the thought process is, you can see on the daily chart and particularly on the weekly chart that we are clearly in a run of momentum to the downside to potentially take out this near miss to this low. I've talked about when price gets close to an area of value and it doesn't quite tap into it, often it will scoop round, take out that low before moving to the upside. I am mindful of the fact that we have a near miss up here. Okay, so price near missed to this area here, and the fact that it was a sharp hook point, it was a sharp move up followed by a sharp move down, does make this more valuable because typically speaking, these moves are more aggressive. Okay, but you can see on the weekly chart that we are well and truly in a run of momentum to the downside to, in my opinion and experience, take out this low, which price near missed to last time around, before potentially moving to the upside to take out that near miss there. But I'm not concerned about that at this moment in time. And one of the things that makes me think that is because if we just drill down, you can see that we have corrected below this low. If we were going to take out this near miss and take out this high from this area here, we wouldn't have corrected. We wouldn't have corrected underneath it. We would have seen something more in the region of a break below and then an aggressive move to the upside to then potentially take out that high. So we're always analysing, those of us who trade the Falcon strategy, the nature of price. So how price did something. So how price broke this low as opposed to if it broke the low. Okay, and that gives us an indication of what might happen next. And a good example of that. So once we push down from this area of value, there's just a few more things to touch on that jump out at me. Notice that here we wick to this area. We did break above, but how did we break above? This is another example of that. So we broke above. I've talked about on the higher time frames how we typically break above a high before moving to the downside and essentially catch people the wrong side of the market, who believe what was previously resistance becomes support once price is broken above. We do break above and we wick through it, not to it, which is another positive. But look at the candlestick. When I see these bullish candles with a wick above them, usually these wicks get filled before price moves to the downside. What happens? Price scoops back up, fills the wick which broke above here, and then pushes to the downside. So these candles in particular, the majority of the time, seem to get filled before price is going to move in the direction that we forecasted. So then we move down from that area once we've filled the wick. And if you can even see here to some extent that we have another bullish wick. Okay, so what do we have there? We break above it again, but we do so by way of another bullish wick, which then gets filled. We then have this kind of 1, 2, 3 touch structure with a 1, 2, 3 middle section, giving me a clue that this is a completed piece of structure, and then it pushes to the downside. Okay, so these are just things that, just going into a bit more detail, it's not, I don't just put any old pair on watch and then go, yeah, that'll do. There's a lot of thought that goes into this. Okay, so then we have this piece of structure. We have a 1, 2, 3. I've just discarded this wick because when we see a bit of an outlier, which doesn't really make sense in terms of this structure, this is usually just volatility. And what have I just said about the bullish wicks, the green wicks? For a move to the downside, they usually get filled. We come back up, we scoop up, take out that wick, and then move to the downside, but we don't break above this high here. And if you look closely, we near miss to it. Okay, give me a clue that we will likely push up and break this high before moving to the downside, because this is a higher time frame liquidity point as opposed to a lower time frame one. We also have a 1, 2, 3 middle section within this expanding pattern. So by expanding pattern, I mean a pattern that has, after its completion, has equal highs and lower lows. This is an expanding pattern. So that gives me a clue that once we tap into this area, that is likely where the move to the downside will occur, and it does. There's also, just to touch on it, a 1, 2, 3 last leg. So by 1, 2, 3 last leg, I mean if we just measure this impulse here and assume that this is an impulse correction continuation, which is usually after the continuation, it's usually a completed piece of structure. We just measure that there. We've fulfilled that move. And if we take it to the break of the correction, so the break of this correction where price broke it, that takes us up to almost exactly where price stalled and reversed within this impulse correction continuation. Okay, so these are things that I'm factoring in when I'm doing my forecast. We then have this piece of structure. We have this 1, 2, 3, and if I just drill down, you can see that we have this 1, 2, 3 with a 1, 2, 3 middle section, and then price comes up. We get a bit of an ending structure here with a 1, 2, 3 middle section, giving me a clue that this is likely a completed pattern. However, sometimes price, after it's completed a pattern, scoops up for a double top. What happens here? We scoop back up to the top and we push to the downside. Okay, we have that bullish wick again. We fill the bullish wick. We create this double top, which we see sometimes after the completion of a piece of structure. Then we push to the downside, and then we correct below this low here, okay? Giving me a clue that I could be looking for more downside. You can see here that what do we have? We have this sharp hook point. Price comes down, comes back up, near misses to it. It comes back down again. Initially, I was looking at this as the potential middle section for a move up to there, and then a break below like that. But what happened? We did get this little ending structure here, which you can see a middle section on the 15-minute chart, I believe. However, what I was the flag that I was looking for didn't happen, and we moved down quite correctively, all in all, giving me a clue that we would likely take out this high, that this was not the area of value, and that this was likely the area of value, because we moved down quite correctively, okay? And we never got that flag that I was looking for. And the clue for me was this: if we scoop up like this and then drop, I asked myself, why have we scooped up? It's likely because there's still liquidity above price. And if there is liquidity above price, where is it sat? It's likely sat at that sharp hook point there. Okay, which gives me a clue that this, what we're seeing now, is potentially just another middle section. So you can see we have a 1, 2, 3. This is massively overextended relative to this move down, if we were to measure them. However, so with that in mind, what I'll be looking for today, and then I'm just going to touch on why it might not occur, is the following. So if price pushes up to here, you can see price has been moving up very correctively. So if it continues to move up correctively to this area, this would likely not be ready by the end of the day, okay? However, if it does, what I'll be looking for is price to tap into this sharp hook point, which it sold off from aggressively last time around, giving me a clue that it would likely sell off aggressively from it this time around. If we tapped into that area and took out this near miss to here and this near miss to here, then I'll be looking for that push down to the flag, and then the flag would be the confirmation that the banks are stacking, the bigger players are stacking their orders for a potential move to the downside, and then I would be able to manage it down to this low here, the low of the structure, for something in the region of 8 to 9% profit, okay? The reason this may not occur, and I'm just going to touch on that, if you just look how price has been moving down. So all in all, if you just look at this move down, okay, price has moved down, right? And here we may have been looking for price to tap into this high. It didn't quite tap into it. It sells off. Okay. We get this kind of running channel with this corrective move up there. It just sells off. It doesn't break the high and it sells off. If we just look at this structure here, so we would have been looking for, I'm sure we would have been looking for price to come up most likely we would have. I think I was looking for that at the time. So the start of where price started correcting would have likely been the area of value. We would have had this kind of 1, 2, potential 3 touch. We would have had a middle section. Price come up. It didn't quite tap into this high, and then it just sold off. Okay, so you can see it didn't quite get there, and it sold off. One of the clues for me that it may sell off early is because within all of that, we have this structure here. Okay, so although we had this 1, 2, potential 3 with a 1, 2, 3 for the move to the downside, we also had, if we just analyze the internal structures, we had this here, which has a middle section. Okay, so we have this high here, which price near missed to here, and then we have this 1, 2, 3, 1, 2, 3 with a middle section there. So we have a completed piece of structure, which if we just measure it, we measure the impulse, and then we have the correction, and we measure the continuation out. Takes us up to exactly where price rejected from and then dropped. So what we might be seeing, with all that in mind, is a similar thing, right? So where I'm looking for price to tap into this high here, what we might see, given what price has been doing all the way down, is we may see something like this. May see a middle section there, and this kind of structure before we go, just like what happened up here, where we don't end up taking out this high or any of these highs here, and then price forms its own independent structure. And one of the reasons may be is because we have this sharp move up followed by a move down, and we have this near miss, and then we break that high. This may be a piece of structure in its own right, okay, because we kind of have the first drive, second drive, third drive, and maybe price has done enough, and this was just some kind of scoop. Sometimes we see these scoops because people who caught this move down think it's just going to keep going, right? And then when people's egos are involved and they think the price is just going to keep going, a lot of them don't lock in any profit. Okay, so sometimes why price can scoot back up like that and drop is because some of the people who caught this move down don't lock in any profit. They think it's just going to keep going, and then when it scoops up, their stop losses get triggered. They may have only moved to break even, or let's just say their stop losses are up here. They don't lock in any profit, and this is just people being tagged out that thought this was just going to keep going and going and going. They get tagged out, and then it drops. Sometimes we see that. Okay, sometimes that's why these scoops happen. But so that is my analysis today. I hope you're taking some value from this. And say trading is much more than just about the technicals. There's many things that I do in my daily life which contribute to how I'm able to see these structures. I remember when I was earlier on in my journey, there was times where, because my psychology wasn't great, partly just through a lack of experience and because I felt inadequate because I didn't know what I was doing. There was times when I would look at the charts and I would literally say to myself, I have absolutely no idea what I'm looking at or what I'm looking for, right? And I found that very bewildering. And if you're watching my videos, you might feel like that as well. But that's just time and experience, okay? With experience, you start to, you might think that you'll never get the hang of this, but trust me, if you do it for long enough, it's impossible for you to not start to notice things that repeat themselves over and over again, because you're blueprinting these patterns in your subconscious, and eventually some of them are going to stick. But in the world that we live in, people think that this is just going to happen overnight. They think that they're going to know everything overnight. They think, oh, it's trading, it can't be that difficult, you just buy or sell, how hard can that be? Well, would the failure rate really be 95% in trading if it was just a case of you just buy and sell? Honestly, I started to realize that quite early on when I started trading, that if it was just as easy as buy and sell, then I wouldn't be finding it as difficult as I used to find it. Okay, so obviously there's a lot more to it, which obviously means it's potentially going to take you a while to learn everything, okay? But one of the things you can do, and it doesn't matter to me whether you do this or not, if you're watching this on YouTube or TradingView, you can sign up through the referral link on my YouTube channel if you wish to learn how to trade the way that I've learned how to trade from someone. I have 4.5 years experience from someone who has 15 years experience. If you want to do that, then feel free to check out the link on my YouTube channel. But either way, just be patient with your trading, whether you want to do that or not. Just be patient. But for now, have a great weekend, have a great day, and I will speak to you again soon.